Hello, everyone. This is Yoko. In this channel, I'll be sharing information in English that I've gathered as events unfold in China, which may not be reaching other countries. I receive information from multiple media sources, and I'd be delighted to hear your opinions in the comments section about the content of the videos. If you find it interesting, please consider subscribing to the channel and supporting us. This year can be described as the year when the mask of the Chinese economy is unveiled. In China, not only is the real estate industry collapsing, but an astonishing number of people are facing unemployment. The announcement of the unemployment rate has been halted, and there are reports of a depreciation in the exchange rate of the renminbi. Despite this, trade is not smooth, and a challenging situation is spreading. Until recently, there were discussions about China becoming the world's largest economic power. I wonder what that was all about. Some opinions in the Japanese media suggest that those who boldly declared China's rise may not have been accurate predictors, or perhaps they were merely eloquent speakers for the Communist Party. Experts familiar with these issues provide comments, suggesting that China's current problems are just the beginning. If the real estate bubble collapses, it won't be the end. Similar situations have occurred in Japan in the past, where the collapse of the real estate bubble led to the gradual disappearance of companies in the real estate industry. The next to be affected might be financial institutions. This may seem like a hasty judgment, but those well-versed in economic issues can predict what might happen next, even without specific details. Currently, the restructuring of small and medium-sized financial institutions, especially local banks, is already underway in China. I would like to introduce the current situation with specific examples, and although this process has just begun recently, it is anticipated that even more significant changes will start around next year in China. The article discusses the dissolution of two banks, and although the title mentions banks, it's essential to note that there are various banks in China, ranging from large to small. This article particularly focuses on the discussion related to very small local banks. These banks, not widely known nationwide, originally operated as local banks. However, with the recent development of internet banking, even these small and relatively unknown local banks started attracting funds from across the country. Some even promised higher interest rates than other banks. With the advancement of the internet, these small local banks, once overlooked, have become significant players. However, they face hidden issues and operational challenges. Banks generate profits through lending and interest collection. In times of economic downturn, the number of people borrowing money decreases, affecting their performance. Moreover, there is a risk that the borrowed money may not be repaid. Given their small size, a substantial default could quickly strain their operations, depleting their lending capacity. As of the end of last year, China had around 1,642 banks, with approximately 40% considered at risk, including those at the level of village banks. However, with the zero-COVID policy ending at the end of last year, it was anticipated that local banks that had borrowed money would revive with the economic recovery, benefiting the companies that borrowed from them and avoiding defaults. Nevertheless, despite moments earlier this year when it seemed the Chinese economy was recovering, as mentioned before, the situation has worsened. Weaknesses have become apparent, and local banks find it challenging to continue their business independently. As a result, there is currently a trend in China towards the merger, consolidation, and dissolution of such local banks. The case mentioned here is an example of recent dissolutions, and a considerable number has occurred since the beginning of this year. These village banks can be considered at the level of financial institutions like Japan's credit unions. In Japan, the capital of credit unions is set to be below 900 million yen. Similarly, among China's village banks, some have capital amounts equivalent to only a few yen in Japanese currency. Consequently, the management of such financial institutions is facing significant challenges, leading to substantial eliminations through mergers, consolidation, and dissolution. While this may not pose a highly significant issue for the overall Chinese economy, it is noteworthy that even mid-sized banks are facing various problems. Essentially, issues are surfacing, starting from weaker points and leading to eliminations. Larger banks are also experiencing difficulties in their operations, and problems that were concealed during the overall good performance are now being revealed one after another. I'd like to introduce an article from December 2023 that focuses on Dalian Bank, a significant scale bank rather than a small local bank. The bank has been experiencing a decline in performance since around 2018, with profits decreasing for 5 consecutive years. In 2022, its profits were approximately 510 million yuan, about 12 billion yen, marking an 18.75% decrease compared to the previous year. However, no signs of improvement have been observed in 2023, and the third quarter profits have decreased by 20% compared to the same period last year. In addition to financial challenges, Dalian Bank is involved in various illegal and fraudulent activities, gradually coming to light. For instance, in May 2023, the bank falsely reported the transaction scale in bond transactions related to Shanghai operations, receiving a warning from regulatory authorities to report accurately. However, by October 2023, Dalian Bank had its qualification for bond transaction intermediary services revoked due to false reporting. This is a significant example of serious false reporting concerning bond transactions, which has a considerable impact on the bank's revenue. Furthermore, in November 2023, there were issues related to the handling of depositor information, leading to fines imposed on the bank itself and individual executives. The bank faced a fine of 446 yuan, about 900 million yen, while individual executives received fines ranging from 5,000 to 100,000 yuan, about 100,000 yen. While these fines may seem relatively modest given the bank's size, they are linked to acts violating regulations in China, which has strict rules based on Chinese law regarding bank account creation, identity verification, transaction record keeping, and reporting specific transactions. In summary, problems are emerging from weak points at present, initiating an elimination process. This is not only affecting small local banks but also significant banks facing challenges, with previously hidden issues surfacing amid an overall decline in performance. Concerning individuals contemplating moving abroad, especially within China, they often possess substantial assets. As a result, there is strict monitoring of individuals attempting to move significant amounts of money, with rules in place for banks to report such information. However, it appears that Dalian Bank did not fully comply with these regulations. This suggests that individuals, especially those moving large sums of money, might have considered Dalian Bank relatively lenient and exploited this opportunity to avoid scrutiny by authorities. There's a possibility that they even established connections within the bank, although it remains uncertain whether any bribes were involved. For the bank, attracting wealthy depositors could have led to a positive outcome, possibly resulting in a lack of stringent scrutiny during the application process. Despite these strategies, the bank faced fines, and various fraudulent activities were exposed. The financial performance of the bank is deteriorating annually. In line with the initial story, it seems the bank is grappling with a significant volume of non-performing loans. As a recovery measure, the bank extended loans to the real estate sector. The evaluation of these loans varies, with some classified as risky assets, and there are concerns that excessive non-performing loans could adversely affect the overall evaluation of the bank. Consequently, the bank aims to separate these non-performing loans from its balance sheet, employing methods such as creating specialized companies to handle non-performing assets. However, this process requires substantial financial resources, and smaller banks like Dalian Bank may struggle with such initiatives. Moreover, not all non-performing loans are easily sold. Attempts to auction off these loans on online platforms, similar to Alibaba's auction site, have not been successful. The difficulty lies in the need for detailed information and specialized financial and accounting knowledge for proper evaluation. In China, the approach of selling non-performing loans through online auctions is not common, and it remains to be seen whether it will gain traction. This situation raises concerns about the increasing burden of non-performing loans on Chinese banks. If not handled effectively, it could impede their ability to lend further and negatively impact their overall business. While the exact outcome is uncertain, the risk of a growing number of non-performing loans poses a significant challenge to the banking sector in China. Investors should exercise caution and thoroughly evaluate the risks associated with investing in Chinese stocks, given the current economic conditions and uncertainties in the market. That concludes our discussion for now. Until next time.